welcome back to another technical analysis video. Today we're going to be looking at the DXY, or the Dixie chart. Now, this is a very important chart because it compares the US dollar against a basket of other 6 currencies. I'm not too sure on which ones they are from the top of my head, but I do know that the euro is, I believe it makes up 58% of it. And then there is also the Swiss franc, the Swedish kroner, the euro, the GBP, and well, like two more, I think. But anyway, the reason why this chart is very important to look at and to understand is because there's a sort of inverse correlation between this and the traditional markets and also the crypto markets. So, for example, whenever there's a bull market in crypto, right, which happened here in 2016 to 2017. That was when the DXY was going down. This is the full picture, so we can see the dates. It goes from 1986 until now, yeah, so until 2022. The reason why I have the full picture here is because I believe it's important to look at like the entire thing, all the data that we have. But if we are to just zoom in over here, we could see that basically from 2015 until 2022, we were in this, we were just in between these two lines, right? So you could see that when we were going down here, this was a big crypto bull market. And then when we were going up, it was a bear market. And now that we were going down again, this was the most recent one. Yeah, you can see that basically from March 20th, I mean, that was when the world sort of stopped. This went down, and during this whole time, Bitcoin went parabolic, Ethereum went parabolic, a bunch of other altcoins went parabolic. And then right around here, which was, so around May, when we had the crash, when Bitcoin fell to 28K, that was basically the end of the bull market right there. And what do you know? It coincided exactly with the bottom, with the previous bottom of the DXY. So this is a very important chart to look at because this will tell you this is a good time. I would say that whenever the DXY is reaching a previous point of support, this is where you would want to take profits. And then when it's going in a parabolic run like it has been since then, I mean, it hasn't been at this level since since 2002, so 20 years, 20-year high, And there's several reasons for this. As I mentioned, one of the I almost said coins. One of the currencies that it's pitted against is the euro, which makes up 58% of it. And due to the fact that we have a war in Europe now, and I mean the entire like all of Europe is going down the toilet at the moment because there we have also set out a bunch of sanctions, which is really bad for the Europeans as well. Maybe not so bad for the Russians who they are targeting, because if you look at if you were to look at the Russian ruble, it's higher than it was before the war, right? So anyway, I mean the reason why this is going up so much is because the euro is going down. I mean the euro, here we can have a look at the euro chart. We can see that this is also a long-term euro chart. As you can see, it goes back to the 70s. But if we are to just zoom in now, I mean, we can see that, when the war started, which was here, I mean, it just fell off a cliff, like straight down, fell off a cliff. And it's reached parity, and it's even less than the dollar now. And my guess is that this is going to keep going down because winter is coming. And, yeah, it's just not going to be a good time for Europe at the moment. And yeah, and we can also take a look at the pound. So you can see that the pound here, this was a huge level of support from basically when 86. This was a massive level of support, and we lost this in 2016, and then became resistance again, and now we're making lower lows. This was the low in 85, and it looks like we're going to continue going even lower, and it'll probably reach dollar parity as well. So I mean, you can see over here on the DXY that we broke through this level, right, which was previous resistance, and we also have this descending wedge basically that we are in, or I mean, it's not a descending wedge, sorry, but we have this resistance sort of triangle coming down. And if we were to zoom in, and this is the monthly, so every bar is 1 month. We can see that we rose up, came down and tested it and held it as support, right? So this is telling me that we still have another leg to go, and I do believe that we can reach this top over here, which is where the previous top was 20 years ago. I think this is around a good target. Maybe we won't get all the way up here, but I would say that this is a good target, and we might screw around up here. It all depends on how the war goes in reality, you know. Yeah, so I just wanted to introduce to some of you and give a quick update on this, and to explain to people who are looking at the markets why this is such an important indicator. It's really incredibly important. It's really incredibly important. I mean, look here in 2008 when we had the Great Recession. Look at that. It went all the way up. What did that have to coincide with? It was a bear market, right? And then when it started to go up again, the DXY started to go down. I mean, when the traditional market started to go up again, the DXY started to go down. Now, I do believe that this still has another leg up to go. I'm quite sure. But I would say that when this starts to, when it starts to try to bounce and go up, and then you see that it's coming down, I would say that's a good time to invest. But that's going to take probably, well, a lot of months, and probably more than 1 year, if I'm honest with you, with my thinking. So right now, what I would recommend is just stay away from investing. This is probably one of the worst times to ever invest. And the best thing to do now is just to stack as much cash as possible and watch the DXY. And when this starts to turn around and really starts to go back down, that's a good time to invest, because there's an inverse correlation. So I would say this is a key resistance level, 121, 120. If it gets to here, if it breaks through this, I would say something has really gone sideways with the war. Like, if this keeps going up, then the war has escalated dramatically. Yeah, so thank you guys for watching. Thanks for hearing out my thoughts, and I'll see you in another video. Bye bye. Take care. Stay safe.